Hello and welcome to another episode of Blue Alpine TV. In today's episode, we will talk about the implications of Venezuelas Petro, and we'll talk about the EU not being able to ban cryptocurrency mining. So let's jump right into this first news story. So there is this education research company called Brookings.edu, and it wrote a report about this Petro. And it says Venezuela's Petro undermines other cryptocurrencies and international sanctions. And it describes a bit about the Petro and Venezuela and the crisis in Venezuela. And if you've been following a few episodes that we did in the past, you will already know most of the details. So there are claims that in the first day from Venezuela's president, Nicolas Maduro has already claimed that $735 million have been raised, and he's seeking to raise another $6 billion in total. According to some of the news, he already raised around $5 billion, but this is not confirmed, so it's not really clear. After Venezuela, Russia, Turkey, Iran, and other countries are actually also looking into creating their own cryptocurrency. And the main issue that the article has with Venezuela is that it's for one, the Petro won't solve Venezuela's issues because what Venezuela needs is economic stability, and the Petro won't be able to deliver this because it's just backed by oil and doesn't really have a real world use case. There are so the government is saying that you can, for example, pay taxes and other invoices with the Petro, but the problem currently is that people from Venezuela cannot actually take part in this pre-sale of the Petro because you have to use euros, dollars, Bitcoin, or Ethereum in order to get Petros. Now the Bolivar, for example, Venezuela's own currency, is currently not accepted. So this putting Venezuelans a bit in a weird position. Now, the other thing is, and that's a bit of the main point of the article, it says that this is not really a proper cryptocurrency. It's not decentralized, it's not independent, it's very controlled, it's very centralized by the government. And Brookings is kind of criticizing this entire project, let's call it, because it won't really help to solve Venezuela's problems. Now, what I think in this case is that the article has a point, like the especially the first 2 points that I've mentioned, the fact that Venezuela's economy is hurting and this is not going to solve this issue, and the other issue that it's not a proper cryptocurrency is, like we've mentioned in previous episodes, is a bit annoying. So I'd rather have Venezuela talk to people from Ethereum, from Litecoin, from all these cryptocurrencies, and actually build a cryptocurrency or create a cryptocurrency built on top of the existing already proven cryptocurrencies. But that, of course, would take the control out of the government's hands, and this is exactly the main issue. So this definitely is an issue. However, we have to think, Brookings EDU is an independent research center from the US. However, it is from the US. So in the end, the US is putting sanctions on Venezuela, and Venezuela is obviously trying to go around those sanctions. So of course, this article will have a bit of a negative perspective on the entire project. We would rather see a more objective, a more unbiased perspective on things. However, like we've said, the article does have a point. So there is definitely some issues happening in Venezuela, and I'm not really sure whether the Petro dollar or the Petro coin will solve these issues. Nonetheless, these are ways, and we've mentioned already the other countries, so Russia, Turkey, Iran, are also looking into creating their own government-controlled currencies, or cryptocurrencies. So it's not really different from the existing currencies. It's just because it is launching with a public sale, that foreign investors can actually invest money into it directly. So it's kind of a small ICO that the governments are doing in order to raise a certain amount of money. And that is, for example, one way how they could go around economic sanctions. Obviously, this is not in the interest of the countries and governments who are doing the sanctions. So also in Venezuela's case, I'm not really sure about the claims. First of all, the problem is that the government and the parliament are not seeing eye to eye. So the governing party and the parliament are actually not in agreement regarding this Venezuelan Petro coin. So this is a big a red sign, let's say. But nonetheless, I think we'll update you guys as soon as we know more about this Petro development. It is the first country to release a cryptocurrency, albeit it's not the perfect cryptocurrency. It's not the perfect country to actually launch it, but it will definitely stay interesting. Now, next news story is EU can't ban Bitcoin mining over energy concerns, official says. So obviously, Bitcoin has something called proof of work. And this is, some say, actually not blockchain, or the idea of the blockchain is revolutionizing, but the idea of using something like proof of work in combination with blockchain is actually what makes Bitcoin so innovative. And this comes at a price, though, because a lot of people started mining Bitcoin in order to make money with Bitcoin. Obviously, the energy consumption of these proof of work coins, especially of Bitcoin, has risen extremely. I think there at the end of the article it says Bitcoin mining alone consumes roughly 0.14% of the world's generated electricity supply. And this is really, really high. Like, imagine how young this industry is, and how little people, how less people compared to other industries are involved in this industry in general. Yet it creates such amount of electricity that is being used. So the one of the European Commissioner for Digital Economy and Society, Maria Gabriel, she made a statement that the EU can't ban cryptocurrency mining because of electricity, because she says if the energy consumed for this activity is produced according to law, there is no legal basis to forbid or even limit it. As mining of cryptocurrency is not an illegal activity, the Commission did not put in place any means to track it so far. This could change, of course. For example, if, let's say, the regulation part is done, it could also be that the entire mining part is getting some regulation as well. As you know, we've mentioned it in previous episodes. In China, a lot of mining, if not the majority of the mining, is currently concentrated in China. However, China has been cracking down on mining operations as well, and has been putting limitations on mining, which, for example, made Iceland a very interesting country. It says here as well, Iceland, which generates most of its own electricity through hydroelectric power stations, now has more prospective cryptocurrency mining projects than the island's energy supply could support. Iceland, however, is not a full EU member, but is part of the EEA, the European Economic Area. So I think cryptocurrency mining will get some part of regulation as well, simply because proof of work is extremely energy consuming. This is also, for example, why coins like Ethereum are moving towards proof of stake and away from proof of work, because they just realize that the energy consumption in general is just way too high. There needs to be a solution for this. Obviously, regulating it won't make it go away. People would just, or companies would just move out of the EU. I know, for example, that Bitmain, that we've mentioned in previous episodes, has moved from, for example, from China and put one of their European headquarters into Zurich and to Zug, to Switzerland. Another part is, for example, Israel. So a lot of countries are realizing that if they're not over-regulating this part, they could actually make money through taxes, through other things, by allowing allowing cryptocurrency mining projects to come to their country. So it will stay interesting. I'm not sure, let's say 10, 15, 20 years down the road, whether proof of work will still be the number one consensus mechanism. Proof of stake is very interesting. However, it is a bit unproven. So we'll still stay interested in that topic. And with that, guys, I'm already at the end of today's episode. Make sure to like this video, subscribe to the channel, and I'll see you on the next one.